Did gold and silver just stop? A lot of investors and traders, they're asking themselves this question. So we'll try to take a look at the charts and decipher. Last week we were hearing news: the physical silver being traded in China was at a premium, $8 premium at $80 an ounce, whereas the futures were somewhere around 71. And when the market opened after the weekend on Monday, we saw a lot of activity. So basically the CME coming out and increasing margins on the silver contracts. So what we'll try to understand and try to answer is whether we might have seen a top in the gold and silver market. So for that, let's move over to the charts and let's see what the charts are telling us. So let's start by taking a look at the chart of gold. Is the COMEX gold traded on the future exchanges, and here what you see is big nice ABCD. This is what I've had as a 1-to-1 price projection, leading us somewhere north of $5,000, which is psychological level. It is a daily chart, and we saw the price drop by minus 4.64%. And so as bulls, you don't like to see that, and whenever we have this much movement, which is about a little over $200 for the day, which is quite a lot. But the important thing to note here is that if we take a look at this in terms of the percentage, here we go, that's from the previous day's stop to the bottom, it's about 5.84%. Previously, over the course of a couple of weeks, we had seen this market drop up very close to about 11%. So this is pretty much half of that. But again, what we saw right here was a market dropping and then forming a nice bottom right here at a very important 38.2% Fibonacci retracement, going back to the lows right here, and we saw the market grind up slowly but grinding higher. And where this drop actually came out from is right between the 1.272 and 1.618 Fibonacci expansions. It was showing the market being overbought to some extent. This sort of a correction, if it is able to hold the key level, which we're going to discuss right now, it does seem to be rather healthy. They're pulled right back into the 20-day moving average. This is the blue line here, and the market seems to have found some support, although we are waiting for further confirmation right at this level. The other thing is that we also have the 38.2% Fibonacci retracement coming from the lows from here, where we have point C to this recent high right here, right at the 38.2% Fibonacci retracement. Further, if we make an attempt to draw a trend line like this, now I think I've not done a great amount of justice to the trend line, but we can draw a little bit of a steeper trend line as well. We've got a confluence of few things, but the really important level is this 38.2% Fibonacci retracement around 4,325. As long as the market is able to hold this, I think we are in the CD leg higher, and in 2026 we could see this move accelerate, especially between April and June, the 1st of June. In fact, from 10th of March, we could see the move actually, getting stronger, in the sense accelerating, and we could see a market moving much higher, especially between April and June, 1st of June of 2026. So that's going to be really interesting. So again, did the market top? Some people come out and say, okay, this might be the top in the market, but we have to wait and see the confirmations. The technical level for us is right here, 38.2% Fibonacci retracement. Even if the market is able to break this level to the downside, you can see where the 200-day moving average is, this gray line. So there's a lot of air in between where it is 38.2% Fibonacci retracement and where this 200-day moving average is. The market will come back right towards the bottom of this trading range. That possibility will exist if we are able to break below this technical level. Above this, if the market is just consolidating right here, we'll be very carefully watching if we are actually forming a situation where we have a bull flag kind of formation. Otherwise, if it is going to be a healthy consolidation, something like this, the market goes up, then it retraces, and then it goes up, then retraces, and then it builds up the energy and begins to make a move higher. That is the kind of price action that we would like to see. But right here, right now, where the market pulled into strong technical level, strong support coming in from the 20-day moving average, 38.2% Fibonacci retracement, and also we have this trend line. Now if we just move over to the weekly chart, so here each bar represents 1 week of trading, and of course the week is not over yet, but we are into the last few trading days of the year. This is what we are looking at on the weekly basis. The week is not over yet, but it is going to be one of the weeks where the market will close lower. And okay, right at the 38.2% Fibonacci retracement, and if the market is able to hold this level, which there's a pretty good chance, and we'll find out over the course of next couple of weeks, taking us into the early 2026. In fact, we could see the psychological $5,000 per ounce, maybe even a little bit higher, because we have the point D of this ABCD pointing a little bit higher. So again, this market did come under pressure, but it could be also because of the margin requirements being raised on the future contracts for silver, and of course gold also taking a bit of a hit. Now let's take a look at the silver market. This is the daily chart for the COMEX silver, and you can see that this market, this is the daily chart, has just gone parabolic. But it's not the first time something like this has happened in this market. This market is much more volatile. Here we can see that it was getting to that stage, then it had a nice about 15% pullback, then a sustained move higher. It has had a bigger move in terms of percentage, minus 22% earlier in the year as well. So this market, compared to the gold market, is a much more volatile. The key things that I would like to mention is that this pullback, when it happened, it's also about a 15% move, and the previous big move that we have seen since, for example, August lows right here has also been, in terms of percentage, 15%. So the moves are symmetric. This is the market symmetry that we like to watch in terms of absolute and also in terms of percentage. So that's one thing to watch. The other thing that I would like to also mention is that when this move happened, this 15% pullback in October, the market retraced right around to this 23.6% Fibonacci retracement, and now that's one retracement that I don't use a lot, but in a market which is just going up and up and up, very strong, this is a pretty shallow retracement. Key thing is that the market just kind of bounced around it for some time, and then it just found a good support after just going sideways, and then from 21st of November it just started to move higher. And what we see right now is, if we draw a retracement from this low of 21st of November, and the high which came in on Monday 29th of December, that is 38.2% Fibonacci retracement in the red line from these lows to this high. And then if we go back a little bit and we go back to these lows right here, 7th of April lows, when the stock market also put in a bottom, and we just draw this retracement, what we get is a 23.6% retracement, and they're all coming in at very close levels. This is the confluence that we like to see, and what it is telling us is that this could actually be a pretty good support level in the market. So whether this support is likely to be held, and chances are it could. We have a number of things going for it. We have this 15% correction, which is a symmetric move. This is what we have seen previously before as well. The price being above or very close to the confluence of 38.2% Fibonacci retracement and 23.6%. We have a combination of two things, and the price still remains above the 20-day moving average. That's a very important technical indicator that I like to watch. What we are watching is that this market looks like it might have had a technical sell-off because of the reasons that I mentioned, but from a technical perspective, the kind of key triggers that we're watching right now, there is a pretty good support level right here. If the market is going to break these levels, then we can have a much further pullback, which we'll cover in another video. But right now, this is what we are watching. $70 per ounce in silver, that's a key level to be watching, and just below that, around 65, is the 20-day moving average. Thank you very much for watching the video. Good luck, good trading, and I will be bringing more updates on this market and also on platinum in the next video. Stay tuned, keep watching, support the channel, give it a thumbs up if you like the video, and share with other people if you found this video of educational value. Really appreciate it. Good luck, good trading, and speak to you guys soon.